Philips just reported adjusted EBITDA for the second quarter. That met the analyst estimates. The company also reiterated its targets for 2017 to 2020, with continued progress on defibrillator manufacturing in the United States. We're now joined by Frans van Houten. He's the CEO of Philips for a first interview to discuss the company's second quarter earnings. Great to have you on the show. I want to get a bit of a sense from you. What is happening with the outlook? You've reiterated that, but what are some of the key risks? Are you seeing signs of potential dangers from these trade tensions that are in the headlines this morning?
Well, let me come to that in a second. The second quarter was solid growth for us, 4%. Moreover, we had a very exciting 9% order growth, and that, of course, bodes well to underpin the future quarters to come. We also were able to improve profitability by 100 basis points, so basically we are tracking within our guidance. Looking forward, we have a slate of exciting innovations that customers are excited about. Of course, that reflects the 9% order growth. And we have always said that the second half of the year will be stronger than the first half.
Mr. Van Houten, you've recently warned that you might move manufacturing out of the UK as the viability is threatened in the case of a hard Brexit. What does the government have to do to change your mind about that?
Actually, Prime Minister Theresa May has invited many European companies to have a conversation at Downing Street, at which we were able to convey that for industry to stay competitive in the United Kingdom, a customs union is really important. That was also the message that I gave. At this time, I continue to hope that this will all work out, and therefore the scenario planning which would affect our factory in the United Kingdom would not be enacted.
So Brexit, a key risk, of course. The other one, again, I want to circle back to these trade tensions. Ultimately, that could have a cascade effect down the supply chains and force you to raise prices in certain geographic areas. I mean, just give us a bit of a top line on where you think this is all going to go this year.
I agree with your introduction. I mean, supply chains globally are very complex. If I take an example of an MR scanner, then the magnets come out of the United States. The product is assembled in Europe, and some of the software comes out of Asia. These are unique innovations, and if the supply chains are upset, then inevitably it risks higher prices for hospitals and for consumers, and that is not a good thing. I think for now, with the initial list as published, the effect is quite manageable and we are able to absorb it. But if this trade rhetoric escalates, then I think we need to be very careful about how the world will evolve.
Yeah, and on that point, Mr. Van Houten, are you doing any contingency planning around your supply chains in the case of any disruption?
Well, Philips is in the good situation where we have a balanced manufacturing footprint. Let me explain that. We produce about 1/3 of all manufacturing in the United States, 1/3 in Europe, and 1/3 in Asia. With such a balanced manufacturing footprint, it is possible to redistribute manufacturing load depending on measures taken. But of course there is a limitation on that, certainly when it addresses the components that we use from secondary or even tertiary supplier base that may come from regions affected.
Frans, do you have the portfolio at the moment to be able to close the gap to some of your rivals? And I'm thinking here along the lines of Siemens Healthineers and GE. Where exactly do you see yourself allocating capital?
Well, Philips has already some years ago made the switch to focus entirely on health technology, whereas some of our competitors are still more in their identity crisis. As a consequence of a clear choice, we are able to advance our strategy to what the customers really need. At Philips, we focus on the entire health continuum and we provide solutions. The solutions address needs of customers for better clinical and patient outcomes and better hospital productivity, and for consumers to take better care of their personal health or support to live with a chronic disease. If you look at our order growth, 9%, that just shows that the strategy is working very well.